if anything is imported from outside India for a consideration, even if it is for the personal use, then also it is treated as a taxable supply. So if you download any applications or anything for which the direct payment through credit card or something is made, even it is for your personal use, then also it is a taxable supply. We have to be careful what our children are doing, because generally we come to know about their mischiefs when the credit card bill comes. How this is going to be implemented, we don't know, but we are expecting that some monetary limit of exemption will be provided, whereby such services which are imported from through Google or other applications for a consideration for personal use will be exempted. We'll have to wait for the notification, but very, very dangerous sweeping provision. Then there are deemed taxable supply where there is no consideration, still it will be treated as a supply. And these are all listed in Schedule 1 of the CGST Act, where these are deemed to be taxable supply even if there is no consideration. Permanent transfer or disposal of a business asset on which input tax credit is taken. Now, on which input tax credit is taken, I can only envisage for the time being that there cannot be a separate consideration for a business asset if it is a part of the slum cell. But if I have taken the input credit and if it is sold as a part of the permanent, the slum cell, there could be an issue about my taxability. The second one is transactions between related persons or the deemed distinct persons. There is a provision for Section 25 under two distinct persons, an establishment of a person in India or establishment of the same person outside India are deemed to be related persons, are distinct persons. If two people are holding two independent registration in the same state, then any transaction between these two registrations will be treated as a distinct person. This can happen under GST when there are two business verticals for which voluntarily the person has opted for the registration. It is allowed, but this is voluntary, optional. Business verticals has a connotation as per the Accounting Standard 17. We know segmentation reporting. We are aware of that. So these business verticals, if a company with the same PAN number, all GST number will be PAN number. If you don't have PAN number, no GST registration. And if you are not having GST registration, you are just like an orphan child under GST. So if the entity has a two business vertical for which it opts for the separate registration within the state only, then any transaction between these two will be treated as a transaction between two distinct persons. Employer and employee are treated as related persons. So as such, any transaction between them are the transaction between related persons. The other part is two establishments of an entity in two separate states, independent states, duly registered, any transaction between them are deemed to be between two distinct persons. So if an entity registered in Maharashtra and having its another registration for the branch or anything in Gujarat, any transaction between these two will be treated as a transaction between two distinct persons. And between such deemed distinct persons, artificial distinct persons, if any transaction takes place, even without consideration, it will be treated as a deemed supply, and therefore valuation of it on a notional basis will have to be arrived at in terms of the valuation principles, artificially. In the context of goods, you will understand that now with the GST coming in, branch transfer, stock transfer will all become taxable, which will have a huge impact on the FMCG companies, all pharma companies who generally operate through the branch transfer. Everybody will have to revisit their warehousing policy, which they have already done. They are doing it, because now there is no need to, or it may not be viable to open up the branches or stockyard or set up warehouses in different states just to maintain the parity in the prices. With the uniform tax structure expected at least in the initial period under GST for the product and services throughout the country, it may not make sense to have warehouses or the branches in every country, every state of the state. Instead, the warehouses or branch may, if at all necessary, it will be a complete consolidation of the warehousing policy, and the warehouse can be set up by the company maybe at some strategic place like Hingna, Nagpur, which is that's why coming up as a major warehousing hub of the country. being in the center, which can cater to the different states nearby. So this will have this type of impact, and that's why logistics companies, those who are into logistic and warehousing, they are probably the favorite players in the market once the GST ushers in for the right reason. It can have a huge impact on the transportation cost and logistic and everything. Positive impact I'm talking about. It is expected that today 1 rupees 25 paisa per kg per kilometer, which is the transportation cost, may come down to 70 paisa with the introduction of GST. And if the road check nakas and everything is removed, and if smooth flow is allowed, which probably is already being hampered, then probably the cost can even come down to 40 paisa per kg per kilometer. Because everything is going into bribes and everything. This is from the logistic transportation perspective. So therefore this between this distinct person, this is taxable. So employer-employee are related person. However, any services from employee to employer is treated as a non-taxable supply under Schedule 3. So one need not worry about that. Today also it is excluded under Section 65B 44 service definition by way of an explanation. However, if the employer gives any gift to his employee of a value of more than 50,000 rupees, then it will be subjected to GST. So if you gift your employee, if a company gives his employee for a sterling performance or during Diwali or Dasera, any gift which is beyond 50,000 rupees valued at, then GST will be payable on it. If it is below 50,000, then credit will have to be reversed. But if it is above 50,000, probably the cue might have been taken from the Sri Hare Krishna Diamonds and Savani, who had actually gifted the small Maruti cars and houses and all that. So whatever may be the justification, but yes, this is something which will have to be kept in mind. The other aspect is principal and agent. Principal and agent are never treated as two independent people. Obviously, vicarious liability, the very fact that there is an agency relationship. In GST, any transactions between principal and agent will be treated as a transaction between two independent people. And therefore, when a clearing or forwarding agent or a consignment agent sells the goods on behalf of the principal supplying the goods to him will be treated as a taxable supply. He will have to pay GST on it, agent will have to take a credit on it, and then sell it on behalf of the principal. His income will be only commission or brokerage, but still the supply. This can completely unnerve the entire principal agency relationship. Because for accounting purpose, income tax purpose, he is still an agent. But for GST purpose, he is an independent buyer of the goods. This can have some catastrophic effect on the principal agency relationship, particularly in the industry like pharma, which operates through the consignment agent principle. This one. So these are the deemed supply. Then Schedule 3 talks about non-taxable supply. Schedule 2 speaks about certain activities where artificially it is declared whether this is a supply of goods or supply of service. For instance, the financial lease has been declared as a supply of service. Under Schedule 2, all financial lease will be as a supply of service. Works contract service, which has been plaguing and troubling the infrastructure and construction sector for all these 40-50 years, has been declared as a supply of service. Any works contract, Section 2, subsection 119 defines what is works contract. Works contract which obviously involves in relation to movable, immovable property, which includes the supply of labor and supply of goods in which transfer of property takes place. This has been declared as a supply of service. So now only one tax on this type of composite transaction. Only one tax. Right? Up till now, it is a overlapping of VAT and service tax. But in keeping with the international adage, the all EPC contracts and works contract service are declared as a supply of service.